would tend on this show, as well as I probably guess most shows, to talk about all the positives. But let's just assume something went wrong. How do you get your money back? What do you do in that situation?
You work with your borrower always and in all ways. One of the myths, and people say this to me all of the time, we're going to do a $600,000 first or combined first and second trust deed on a property in Irvine that's worth $1 million. And they laugh and they say, oh, well, you probably hope they never make a payment. And that's the biggest mistake you could ever have. You do not want to make loans where people never make payments. A lot of problems can happen in that. The worst possible thing that can happen is the property reverts back to you. And you say, well, that seems like the best thing that can happen. But the reality is, if that property reverts back to you at $600,000, nobody else wanted it.
Yeah.
And there's a reason why they didn't want it. And it's because it's not worth what you've lent on it. The market has shifted. There's something wrong with it. And investors and the general public don't ever gather that. And I've been doing this for 25 years, and I've been through 2 major market declines. And if you get the property back at foreclosure, you lost. Because basically you paid full market value for that property that reverted back to you. If it was worth more, someone else would have bought it, and you would have gotten paid off.
It's a good way of looking at it. It's true.
And it's a rare way of looking at it. Have you ever heard anyone tell you that before?
No, not at all.
And it is a fact, and we've been through it a number of times. So if you get into default, that is a risk that you may end up with a property. Now, if you're in first position and you end up with it, you may be able to turn it into cash flow, which is a positive, and the market will always recover. Markets always go up and down. If you're in second and you foreclose in a property, you have to service that first trust deed. And that first trust deed may say, there's a due on sale clause, or there's a due on transfer clause, and we don't want to accept your payments. We wanted you to pay us all $500,000 and pay us off. So there's different risks that come involved in these types of things. And the best way to mitigate your risk is to keep your loan to value low, to stay in my opinion, in the best places where values are the first to go up and the last to go down, and then to own multiple investments or a portion of multiple trust deeds where you don't have a lot of eggs in one basket.